These are the things which I would have looked for maybe 100 years back. My grandfather may have looked for the same thing. 40 years back, I may have looked for the same thing that I'm looking for today.
But is the market looking at these things, or it is looking at something else?
But actually, it shouldn't matter. As long as you can control your FOMO and not worry about things which you don't know, you just stay away from them. Why would I go and put money into some business which I don't know? I'd rather wait for the market to discover it and enter late. I don't mind entering, say, Infosys at 400 and then holding on for a long period. Yes, I missed it at 100, but I still get time to make money. See, there's one
One
very
interesting
important
point
thing.
that I noticed when you mentioned Infosys, that one of the founders of Infosys has not sold a single share. I found that remarkable, because probably the person is the best investor in Infosys. Because today Infosys gives him huge dividends, and he is using that dividend to reinvest wherever he wants. Whereas others have made different choices. So this concept of not selling also actually is not a bad thing, not such a bad thing.
I don't know, because see, concentration risk is real. When the company is very successful, you say, oh, he took a concentration risk. Concentration risk should be taken only by the promoter. I don't expect an Azim Premji or Mukesh Ambani to have
Worry about this.
worry about this. So their portfolio could be 95% of their own company. But for an employee to do that, employee is not privy to what is exactly happening in the company, and it's too risky. Some people have been successful. It does not mean, see, it wouldn't have worked in Satyam because you may have panicked and sold at 10 rupees.
See, talking about employee, holding on to a stock for a long time, I'm going to throw up two examples. Two very, very successful business leaders of our country. One is Mr. Aditya Puri, and the other is Y.C. Deveshwar, who from the 90s till the time he relinquished, literally marshaled ITC to where it is. He was a big driver of ITC, bringing it out of those troubled times in the 90s to where it is today. But the interesting part, Subra, both of them sold their stocks around the time they relinquished office. They did not hold on to the stocks once their professional engagement concluded, or around the time their professional engagement concluded. In the case of Mr. Aditya Puri, it was a clean break. He sold his entire shareholding. It was really something remarkable. I mean, it's something which is for case studies in future. In the case of Mr. Deveshwar, he sold his ITC shares to buy a house, which I presume would have been an emotional decision rather than a decision which involved investment merits. So, I mentioned to you that the founder holds shares even today. He is no more associated with the company, still holds all his shares. So, this ability to hold on for a long time is also something which is affected by experience both ways.
No, because if I were an employee executive, I would sell some shares every month because I'm also going to get ESOP. Remember, a CEO also gets ESOP as an employee, he's not the promoter employee. So let us say Mr. Aditya Puri got 50,000 shares every year. I would still sell 12, 13,000 shares every year, every month. No, I'm saying I'll sell 1,000 shares every month and de-risk my portfolio. You don't know what can go wrong in any company. So de-risking is important, but sometimes when you don't de-risk, you still benefit. Like if I didn't take any term insurance, now I can say I was very smart because I did not die at 32. But you do de-risk. It works both ways. Somebody who did not de-risk in Satyam would have been wiped out, because if your net worth is 20 crores, out of which 18 is Satyam because you are an employee, or 18 is HDFC, you're very well off in HDFC, but you lost money in Satyam. So I think the risk is too high for a guy who's starting from zero.
I am curious to see what the CEO outgoing in DMart will do after he leaves DMart. I am very curious to see what happens, because these are case studies which are very, very significant. I am not talking about some ordinary executive. In fact, I mentioned two who are deeply respected business leaders, and the third is also highly respected,
Correct.
if not deeply respected.
Correct.
So I want to see what they do with because they have the experience of actually running the company. Coming back to the topic, they have run the company for a very long time and played a very significant role in making the company what it is. So I want to see whether they hold on to that company after they
See, again,
leave.
I mean, look at the topic that we were talking about. Depends on your own experience.
Exactly,
Right?
that's why I'm coming.
So, let us say you work for 10 years in HDFC Bank and from there you move to Axis Bank. So, you got ESOP in HDFC Bank, then you got ESOP in Axis Bank, and then from there you move to say TCS or somewhere. Again, you got ESOP. What will you do with each of those ESOP? Will you sell all your HDFC Bank ESOP and hold on to Axis ESOP? Will you sell off all HDFC ESOP and Axis ESOP and hold on only to TCS ESOP? Because you are talking of two people who did not change their jobs for a very long period of time. What happens to the CEO? Somebody like say an Amitabh who has moved from HDFC Life 3 years to Axis. Should he get rid of his HDFC Life ESOP? I don't know. These
Oh,
are
that
all
is meant for a
questions.
curious case study. We have to look at it.
Yeah,
I don't
somebody
have
who
detail.
spent say 7 years as a CEO of an insurance company and then 20 years or 15 years as CEO of a bank, which is definitely a bigger job. What will you do with each of those ESOPs? So you have to, if you ask me, the basic simple rule is you should not drink and drive. You should wear a seat belt when you are driving. These are basic things. Somebody can say, oh, I drink and drive, 2 packs does not affect me, 20 years I've been driving, I have not had a problem, or I don't wear my seat belt and drive, I've
These are
not
the
had a
wrong
problem. These
experiences.
are the wrong examples and these are
Wrong
the
experience
outliers.
also.
Wrong experience. So if you have had an
So you are
experience,
saying that it is okay to de-risk and do all these things.
you should.
You are saying you should.
You must.
I
Because
have a fairly open mind on this.
no, because also it's a question of after your net worth is say 500 crores or 600 crores, it may not matter that you already have 50 crores in say guilt. That will take care of your life for the rest of your life. After that, if you go to zero, you still have 50 crores. But till you have not built the basic foundation, maybe with your salary, without selling the share, maybe you sell 100 shares, 200 shares a month, which is a minuscule thing. After you have built the strong foundation, I've got gilt, I've got annuities, and I've got bank deposits, which will just not go down in NAV, and that is already 50 crores. Beyond that, if you go to zero, it doesn't matter. But if you've not built even that, you're living in a rented house because you think equity will give you better return, and suddenly finding that one day you have gone to zero, which can happen, and it will happen more and more going forward. Companies will go into bankruptcies. If you see what's happening in US, maybe Indian banks won't go, but a lot of tech companies will go. And then what will you do? So I think you must, if you're the guys who didn't do and did well with money, a lot of employees of HDFC and all are like that who did not sell their shares and today they were 30, 40 crores. They have taken the risk and things have not gone wrong. It's like you're touching a rhino and the rhino is not reacting to you. Just you're taking risk.
So your experience won't necessarily help in such situations.
Yeah, I mean the market, like, see, let's say 1993 or 1990 you entered the market, 1992 you were buying, 1993 you were buying, and 1994 you got taken to the cleaners, and then in 1995 you had those shares. In 2002 nothing happened. 2003 your NAV went from 10 to 11. Okay, now you have seen that NAV go from 10 to 3 now to 11. In desperation you will sell, right or wrong. 7, 8 years you have been taken to the cleaners, you have struggled, your family has laughed at you, saying in PPF your money would have doubled, what are you doing, and all that. You have taken all that mocking. You come from a family which did not invest in equities. In 2004 you would have sold out. You would have sold out at 6,000 Sensex. You would not have waited for it to reach
But in that
21,000.
sense, I think these examples which I have given have shown remarkable patience. They have had the luxury of showing that patience because they probably had a good salary also. But
Correct.
if you take the average individual professional who gets ESOPs, he has to sell his ESOPs to fund his fresh ESOPs. That's
Yeah.
one point. That is one.
Correct.
He cannot borrow and do it. I would not advise that.
Yeah.
So he has the experience of being in the company, and yet he has to sell to meet his
Yeah,
requirement.
see, I decide that I will use my ESOP for buying a house, for buying a car, I will not borrow, and for my foreign trips. I will not use it for other things. I will make one foreign trip once in 2 years, and for that I will sell my ESOP. That's also not a bad thing. assuming a person is not from a rich background, assuming a person's family has no experience of investing in equities, he's already being told, look, you were holding Wipro in 2000, in 2002 prices have come down, at least now you sell, which is that pressure. You are talking of a person in a vacuum where nothing is impacting him. Every day he's reading. ITC was being written off by so many people when the price came down, then it went up. So what about, forget of Deveshwar. Deveshwar by the time was old enough to know what to do. But think of a kid Deveshwar at 22 having ESOP, at 27 finding it is not adding any value. His parents, everybody would have said, "Arey, sell some, what is the problem, it is not doing well." You will sell. That has been your experience. Okay, you got the share at 25 rupees, it has gone to 80, it has come down to 30 or 40. Again, when it goes back to 60, you will sell. That is what your experience is telling
Okay.
you. It does not matter what advice Shyam is giving you or
So
somebody else. So you will live by your experience.
it's more a teacher.
It is a teacher. The question is what you learn. The problem is we learn wrong things. We think, oh, housing companies boomed in US, or housing flipping was a good business in the US, and that failed. Actually, that didn't fail. What you learning is, if you do activities with huge leverage and the asset prices fall, you will be taken to the cleaners. It is not just real estate. It could have been silver. It could have been gold. If you have a leverage position and the price of the asset falls, you will be taken to the cleaners. Could be any asset. You cannot say, oh, I should not do house flipping. That's a very narrow lesson that you have learned. The broader lesson is, any leverage position, if you can't meet the leverage from other assets, you will be taken to the cleaners. That is the important lesson. So how you learn your lessons is important.
That was a very interesting conversation on experience and how we use our experiences in our decision making in our life. We have seen people who have pushed the decision as long as they can push it back. And we see people, many of us are there, who need to sell to participate in something else, who need to sell to fulfill obligation, who need to sell to fulfill duties. It's not that we have not learned from our experience. We are learning by our experience. So, experience cannot necessarily be seen as an impediment. If you have the luxury of not selling your investments, then you have no impediment. But if you have a necessity, that necessity becomes a temporary impediment. You can still rise above that by making sensible, informed choices with the money that you get from selling your investments. So, it's essentially how you handle the proceeds of a sale and how you prepare for a sale and how you position yourself for a sale. If you don't position yourself correctly, if you don't prepare yourself, then the proceeds will get wrongly invested and you will create bad experiences. The whole game is about avoiding such experiences. Thank you for watching this video. Keep watching this series.